Good morning or good afternoon, wherever you may be. John McNichol here with Technically Speaking, Reversal and Bounce Patterns for February 25th, 2019. Do appreciate everyone that is here live with us, whether you're on the Thinkorswim platform or with us on YouTube there. Thanks for being here, along with everyone that is with us listening to the archive session. It's great to be here. It's great to start another week with you once again. Let's go ahead and take care of our disclosures, and we'll get right into the day. Keep in mind that options are not suitable for all investors, as the special risks inherent with options trading may expose investors to potentially rapid and substantial losses. Carefully read that previously provided copy of Characteristics and Risks of Standardized Options. Spread straddles, other multi-leg option strategies can entail substantial transaction costs. They have a tendency of being involve more greater risk, complex and greater risk than single-leg option trades. Investors should also consider contacting a tax advisor regarding the tax treatment applicable to spreads and other multi-leg transactions. Now, in order to demonstrate the functionality of the platform, we need to use actual symbols. However, keep in mind, TD Ameritrade does not make recommendations or determine the suitability of any security or strategy for individual traders. Any investment decision you make in your self-directed account is solely your responsibility. Now, we'll be practicing some trades with the paper money application. We have a demo account that simulates this. You have access to paper money. That is for educational purposes, and successful virtual trading during one time period does not guarantee a successful investment of actual funds during that later time period, as those market conditions change continuously. Now, some traders may go ahead and utilize tools such as probability analysis and backtesting. Keep in mind that those tools, theoretical in nature, not guaranteed, does not reflect a degree of certainty of event occurring. Also, with backtesting, no guarantee that the same strategy implemented today would produce similar results. And there's your Greeks for informational purposes, understanding the impact of price volatility and time when it comes to options trading. Sometimes we place some practice option trades in this class. One should have a better understanding of how price volatility and time impact options pricing, as well as your positions there. All right, we're going to go ahead and bring up the Thinkorswim platform there on our demo account. Our agenda item, we welcome those of you that may be new with us. I see we got Dreamland and Pierre Paul with us, Andy Active, and everyone else. Usually see you each and every week there. For those of you that are new, this class may come across as being possibly a little over your head. That's all right. We have some great webcasts that focus for beginners. This class is a little more, maybe a little more intermediate to advanced. So if you feel you need to take a step back or take a break, we do have a Getting Started with Technical Analysis, and that is actually every morning. And that session may have already been archived. If one goes to the Education Center, and sometimes we have a little issue here on with some of our webcasts on bring up the education page on the platform. But if you can't bring it up here, one can also bring it up on the TD Ameritrade website, which I do have on the background here as well. TD Ameritrade website has some great resources and research. If I go to education here and select webcasts, that'll bring up our schedule. And if I go to the archive webcast, one may be able to see if we have that session posted. And there we go. Getting started with Technical Analysis and Charting Essentials with Cameron May, fresh off the presses from earlier today. And hopefully with this session, if those of you have missed it or want to go back and listen to it, maybe updated within a few hours there. Alexis, thanks for being here. If you want to see the upcoming calendar for any of our webcasts, right there's that webcast tab, and you can see some of the other classes that are being taught. For instance, if you like some of the things that I'm speaking with you today here on Active Trader, Technically Speaking, Reversal and Bounce Patterns, you can catch me first thing in the morning at the market open for swing trading days to weeks, kind of focusing on some of this short-term style of trading there. A little something for everyone there. And also on Wednesday with my schedule there a little later in the day, we have verticals, trading verticals, which I believe starts at about 3 p.m. Eastern time there. All right, well, let's go and get back to the show on the platform. Kind of our theme for today, reversal and bounce patterns. A lot of the discussion points is, one, looking at and identifying bullish and bearish reversal patterns. Two, identifying bullish and bearish candlestick patterns. We'll go over a few of these and also show some of the resources that you have available for you to help identify them. We'll also discuss some potential trading techniques used in some of these very same price and candle patterns. And we'll place some of our practice trades, as well as look in some existing practice trades that we've done on our Paper Money platform. What the objective for this class is with an understanding of reversal and bounce patterns, being able to potentially look to outperform the market, no guarantees of that, by focusing on areas of the market that are outperforming. Reversal patterns can be signs of that initial change in momentum, and that is one of the reasons why we approach the market here in our technically speaking class from the top down. So utilizing some top-down analysis, possibly being able to utilize reversal patterns to seek potential outperformance based off of outperforming sectors. For instance, if we actually look at some of the sectors starting off, it can be a bit of a starting point on identifying what patterns may be appearing in the market. Good starting point is also looking at the broader market indices, and we have the SPX representing the S&P 500. As we zoom in on this, the market once again has been advancing this week. We zoom in today, prices gapped at the opening from Friday. However, notice today's price action as we're going into the last 2 hours of the market. The candle's forming a little more of a doji or a spinning top, an example of more of an indecisive day, even though prices had gapped open. Not a continuation as in other days where there's been more open or white candles here demonstrating upward momentum as prices had closed above where prices had opened. There was a one-day pullback on the 21st, and as we went into Friday, closing out on another up week, and that momentum continued into the opening, but currently a little more indecision as more of that a doji or spinning top has formed. So we'll see how that plays out for the rest of the day. Some traders are looking for at least some type of pullback based off of how strong the market's been going into the 9th week of an advance. There's been very few examples of pullbacks where they may only occurred over like a 1 day or 2 day. I'm just highlighting some of those patterns where we see some of these little dojis and spinning tops, a little bit of indecision. From a bullish perspective, that's kind of taking a breather after a strong run-up in prices. And that's continued where some of these pullbacks have only to be to the tune of about 1 to 3 days before prices go up again. Now, from a standpoint of the trends and moving averages, those of you that followed me in previous sessions, we have combinations of moving averages representing trends. In green, a 55-period moving average representing the intermediate trend. The index is above that. Looking at the more shorter-term averages, so there's the 55 right here. I guess I should probably make that more green. In blue, an example of a 13-period moving average, kind of more of a 2-week average. And then we even have an example of a 5-period moving average representing kind of that weekly swing. Now, notice the trends are still up, still strong, bullish sentiment there, with today's price action just indicating a potential slowdown. And what traders may look for is seeing if prices pull back, whether it's a 1 or 2 day pullback, or even something more significant as prices may trade back to some previous highs. Now, if anyone has any questions on anything that we're discussing here today, feel free to share. We'd certainly love to hear from you there. And so that's what's going on with the broad market. As we go ahead and look at some of the sectors and see if there's any other patterns that are forming, we're probably going to see a lot of sectors demonstrating some of the similar characteristics on what the market has done. Now, we just kind of glance at the S&P. Other traders may look at the Dow, the NASDAQ, other indices as well to kind of get more of a consensus. Looking at the NASDAQ, we're seeing kind of a similar situation. Now, one interesting pattern, not saying that this is what would form, but as an example, if this pattern stays where it's at today, more of that doji or spinning top, and let's say tomorrow stocks actually open lower and actually open lower than the previous day's low, then this pattern may be referred to as an evening star. Now, some people may say, well, John, hey, I'm new to candles. How do you know that's or potentially an evening star? Well, we can learn about some of these patterns, and some of these are actually right off of the Thinkorswim platform. Now, we showed you the education tab, but also on that education tab, there is Learning Center. And if we go to Learning Center, this will teach you everything on the Thinkorswim platform. And if I just come over here, and even something as simple as right here where it says reference, let's go ahead and click on reference here. And right here under reference, one can see various groupings, learn a little more about drawing tools, learn something more about ThinkScript. And ThinkScript is some of the tools that we're sharing over here on the left. The codes for a lot of this script is right here. You're welcome to go ahead and copy, share, and practice with them if you'd like. Ken Rose does a session every Tuesday at 5:30 Eastern Time for about a half hour going over how one may be able to set up and practice with some of these tools. But for our discussion here, right here on patterns, classic patterns as far as price patterns. And since we are discussing a little on candlesticks, right here we have candlesticks. So I'm going to go ahead and click on that. Bring that up. Now, there are some patterns that may be interchangeable, both bearish and bullish. And then there's also a series of bearish only and bullish only patterns. Since I highlight an example of potentially an evening star, we went and brought up bearish only. Now, bearish patterns will have a tendency of appearing at highs or at areas of resistance. After typically a run-up in price, these are referred to as reversal patterns. Now, I mentioned the evening star. If I come here and click on evening star, and what you can do is you can actually go through the list and click on each one of these individually. There's a little drawing here, as well as a description of that pattern. And so we can see here, as I explained on the chart, kind of a doji or a spinning top that's kind of sitting out there by itself, sitting up there in the sky. And that would be confirmed if price opens lower the next day and trades lower. Now, no one can predict for certainty if this pattern would appear, but maybe this is something that you can follow up on and see if the market does this tomorrow or not. If it opens lower and continues to trade lower. You want to go ahead and learn about some other patterns. Right here on the left, you can just go ahead and scroll through each of these. Some of the common ones, and these aren't any endorsement of any particular pattern, but showing you some of what may be more of the common or possibly easier to distinguish. We discussed the evening star. Another one is a shooting star. If I click on the shooting star, notice it looks kind of similar to that evening star, except it has a little more of a wider tail, kind of shooting down out of the sky. Tells you a lot about psychologically about what may be occurring with the market, where prices had opened up, rallied higher, and then went ahead and came kind of crashing down towards the low of the day. So kind of a little psychological change of momentum there. Other ones while we're looking at the list is the dark cloud cover. And notice, these descriptions are fairly descriptive of what we're actually seeing. Previous day is up. Now price actually opens higher, demonstrating more bullishness when price opens, but then it actually trades lower in the day and it penetrates well into that previous day. In fact, some traders would look for at least penetrating about halfway through that candle. Mid portions of these longer candles have a tendency of acting as support and resistance. If the prices go ahead and trade more than midway, that certainly would determine a potential change in momentum as prices kind of erased a lot of those gains. And while we're looking at the list, we mentioned about Evening Star, Shooting Star, Dark Cloud Cover, other ones such as the Hangman, kind of a little grisly one there, thinking price is rising up as the man walking up the steps or the gal walking up the steps to the hangman's noose, and looks like a person hanging high with the head and the tail representing the body there. Again, these patterns have a tendency of occurring at highs or at areas of resistance. And taking a quick look, kind of the more common ones there. Another one is referred to as engulfing patterns, which, as I'm looking at it, may not be in this list right here. But if you go to some of the bearish and bullish type patterns, this is where some of them may be interchangeable, such as an engulfing pattern. One from a bearish perspective, prices would open higher. And this other one being an example of a bullish engulfing, where prices are engulfing the previous day. Now notice what's consistent with these patterns is in the case of a bearish candle pattern, typically price action has been rising prior to that formation. And in the case of a bullish candle pattern, prices have a tendency of pulling back. So with a bearish pattern, prices have approached a resistance area up at a high. And in the case of a bullish pattern, prices may have pulled back to a level of support. All right, and then other common patterns that are interchangeable, and we've actually incorporated that into some of our practice scripts on the Caholds, on some of the bounces, haramis. Right here, the harami, or those inside days. Go and click on that. When price action actually occurs inside a previous day. Probably should highlight this as an example of red because that's an example of a bearish harami. Price action is rallying up. In the case of a bearish harami, prices are rallying up to a higher resistance, and price, a little doji or a spinning top, occurs inside that previous day. Likewise, on a bullish pattern, what's happening is previously price may be pulling back, and then we see an example of an inside day as prices are inside that previous day, ideally looking at whether it's a higher low or a support area. In the case of those bearish patterns, looking to occur more at that resistance area. All right, so this is probably something, if you're new to patterns, spend a little time in this. Also, if you come out to some of our workshops like Strategies for Growth, we go ahead and take a deeper dive with this on day one in the technical class. So if you see a class come into a city near you, feel free to go ahead and join us there. And let's see, look at some of the comments. Francisco says, is there any way we can look for a big reversal warning, like extreme sentiment one way or the other? Well, some of the candle patterns that we were just going over, Francisco, may be an indication of that, although nobody knows what the duration of that is. Sometimes when it comes to reversals, it's kind of like a snowball. Going down a hill or starting an avalanche. It's something that starts small and that momentum builds on each other. When we had the reversal in the market, looking back at the SPX as an example, and remember discussing this with those of you that may have joined us with Strategies for Growth out in Salt Lake. We had looked at a long-term chart of the SPX and looking at some of those previous lows. When the market had sold off, it had sold off closer to that longer-term support. Markets rallied off of that right after Christmas, and certainly back then, is anyone able to predict with certainty as far as price trying to work its way up to those new highs versus failing? Well, notice as we look at the candles, all white candles, these are weekly candles demonstrating weekly momentum, very little slowdown, and usually it's been just little pauses week to week. And as we go to where we're at right now, this would be the question mark. Is this going to be more of a doji, taking a little breather like previous weeks? I'm going to go ahead and remove some of these here. Kind of move in little highlights to some of these doji weeks where there's a brief pause. And notice for those of you that are more investors or longer term, we can apply these same principles on any type of chart. We're looking at a weekly chart right now versus a daily chart, which represents each week. And looking back on the reversal week, the week following Christmas, here's an example of the high portion of that candle. The very next week, going in the end of the year, price closed above the high of that low period. This is what we refer to as a hold. This was a hold on a weekly period, and that's continued to this date. So, a sign of a reversal, Francisco, from a weekly standpoint is if price action would to trade lower and go below the low of a previous week. This would be an example of an engulfing pattern because prices would be engulfing the previous week. And this would be more of a dark candle. I know it almost looks like a Picasso there for a moment, but this would be one of those signs that some traders may look for. Now, if prices continue trading higher, and this week is a higher low, then some traders may look for a pullback below that week. So that would be one sign right there. Other signs that some contrarians may be looking at as well, and we discussed this in some of our previous sessions on the daily charts, is there's still divergences that have formed on the momentum of the market. When some traders look at an indicator, like the MACD histogram here, you have the MACD histogram down here on the middle part of the chart here. And even though price action has been going higher, making those higher highs, that momentum has continued to be slower and slower. With the breakout that we had over this last week in the market, as prices kind of took out those highs, we discussed that mid-candle going back here in December, prices had broke above that area. But the momentum really hasn't picked up as much. One would expect that MACD to continue rising if that momentum is continuing, but it's actually still a bit muted. So a combination of that divergence as well as potentially bearish formation on the candle, some traders may be anticipating at least a little bit of a pullback, whether it's a day, couple of days, possibly a retest of the breakout point at around 27.40 or so. We'll see. There's no, again, prediction of that. It's just basically showing what's being demonstrated right now. Let me know if that helps. One may take a deeper dive into some of the other sectors. Some sectors that have started to lag a little bit. And one week we'll take a deeper dive on each of these individual sectors from the top down. But just going over here on the left and look at something like real estate. This is the real estate sector. Notice the real estate sector today is down. This is an example of an engulfing, bearish engulfing. Now this has occurred in the past too. There's been some inside days here. Could be just a pause. But starting off the week, a little more of an engulfing pattern. See if price continues to pull back. I think utilities is showing another pattern as well in engulfing. Now these are more defensive areas, and even consumer staples as well, kind of more engulfing. So more defensive areas have been pulling back. Now some traders may consider that to be bullish, that money's flowing into other areas such as the industrials, which gapped up higher. But again, a little muted there. Also looking at some other asset classes like bonds. Usually if those interest rate sensitive sectors are falling, typically there may be interest rates rising. But interest rates are kind of muted here. Not a big move in the yields. So something's happening there. We'll see what transpires with that. Okay. All right. Well, we covered a bit of ground there with candles. Another thing you can do is if you want to help visualize some of these as kind of a teaching tool, we showed you on how to, in previous sessions, identify these potential highs and lows that may occur in the trend. We take this in more detail in our swing trading class in the morning. Now, if I go to patterns and go to select patterns, right here in the upper right, select patterns, we've showed you that Williams fractal. And this is not only a potentially good educational tool. Oh, now notice it's not coming up because I'm on the classic patterns. I meant to click on candles since we're talking about candles. And it's in that list, Williams fractal. If I double click on that, that'll go ahead and bring up the indicator to the right, and we can apply it and click OK. And you'll see these little caret points that are occurring at some highs and lows in the trend. Now it's not forward looking, it's always looking at the past. But if you look at some of these little fractal points, you may start identifying some of the candle patterns that we discussed here, such as back here on this high in early February, more of a harami as price traded up to resistance and price formed an inside day. Now you're not always necessarily going to see a classic textbook pattern, but even here on this low right here, price had opened lower and traded higher, penetrating that previous day. Example, a little more of an example of a what's referred to as a Pearson line, part of the bullish reversal patterns. And then even things like hammers right here. Now notice there's not a pattern right here, but we discussed this could potentially be a shooting star now, as it's in that lower line. So a little educational tool. Another thing you can do, although this can get a little noisy and you can practice with this, if you come here to patterns and go to select patterns, go to candles, here's a list of all these various candle patterns. And what I'll do is I'll click on some of the ones here that may be commonly applied and some that are discussed in our workshop. You know, there's dark cloud cover, we'll do dojis, we'll do engulfings, evening star, hammers, hanging man, haramis. You can kind of go through and identify, you know, any of those you want. Shooting stars, morning stars. Covered quite a bit of them, but you get the picture there. And if we click apply and OK, you may see some of these patterns form on the chart. Now it's not perfect, and it's not meant to be an endorsement of anything. But if I go ahead and bring up an individual stock, let's say Netflix over here from our NASDAQ 100 list, if you look for some of the arrows that may appear on the chart, some may see some of these patterns. Now, again, it may get a little noisy there, and you know, one can always go ahead and turn them off once they look at it by uncheck and show patterns. You can go back and forth and turn them on or off. But where the arrows are would represent a particular candle. Now what you have to do is if you go to the arrow, you can go to the arrow and right click on it. Maybe test yourself. What pattern do you think it is? And then right click on that arrow, and this is an example of engulfing. Price is engulfing that previous day. If I go to another arrow, which is pointing down, another bearish one, there's another engulfing. Now, sometimes it doesn't identify them. Some of these haramis may pop up. It's not perfect, but could be potentially a good teaching tool for you. One certainly seems to be relatively clear on looking back at swing highs and swing lows is the William Fractal as a standing point, and then identify some of those patterns that you think may be appearing there. So we'll go ahead and we can go ahead and remove those. Quick way of removing ones, you should be able to hit on the shift key and highlight. Nope, doesn't look like you can do that, but you can go through and just kind of X out those different patterns and then click apply. All right, so we took a deeper dive with the candle patterns for today. We'll spend more time next week going over more of the common reversal patterns, because part of the deal is, as we look at the markets right now, there are not necessarily bearish reversal price patterns that are forming at the moment. Unlike when we were looking at bullish reversal patterns that had formed back in November going into December, where we started seeing some breakouts. Now, one clue, just a technique on where some of the major reversal patterns may reside, is utilizing an example of an intermediate moving average. For our example, we've been utilizing an example of the 55 period moving average. Kind of a take on Fibonacci, which we've discussed. Some traders may just go ahead and use a 30 period or a 50 period. Ours are highlighted in green. Now, when price went ahead and crossed above the 55 period moving average, that could be an initial sign of a reversal, not a guarantee. And then some traders may look for crossovers when prices are not only crossing over, but the moving averages go ahead and cross over with it. So in this example, the 5 period crossing over a few days later, and then a follow-up on the, in this example, the 13 period moving average crossing over, prices reversing its trend. Because with that trend reversal, traders are have a tendency of looking for, I'm going to go ahead and remove some of these here. Some traders may be looking for prices to make higher highs and higher lows. And when both of these averages had crossed above each other, above the 55, say right at about this point right here, just going to highlight that right there for a moment. And I'm even going to go ahead, I'm going to right click and we're going to remove all the drawings here by collecting right click, clear drawing set there. So right in this area right here. Notice at this point, price action started making higher highs by taking out previous highs. Notice I'm just kind of connecting the dots on some of these previous fractals. Price broke out. Price is above the 55 period moving average in this example. And not only was it making higher highs, it was also making higher lows. Very small little pullbacks here. Another higher high and a higher low. Again, looking at these fractals and looking at their direction may imply the direction of that trend. Now, there's no guarantee that those trends will continue to go that way, but kind of a bit of a starting point to help you out with that. So if we go and apply that to some of the current market conditions, again, a lot of these stocks may not have reversed as of late. They're more of a continuation of a trend. Let's bring up Facebook. Facebook previously was going more sideways, which was more of a double bottom formation, kind of a rectangle where prices at least formed two bottoms. And then prices went ahead and broke out above that resistance. And notice when prices broke out of that resistance in our example, price was getting above the 55 period moving average, started seeing moving averages cross over right back around here. And sometimes the averages may lead, other times the price may lead through that resistance. and price went ahead and bounced. There's a gap on earnings, and prices have pulled back. Now, today's price action on Facebook, notice there's a little fractal low there. And if we look at the low day, prices have traded and closed above the high of the low day. This would be an example of a bounce. And so some traders may go ahead and look for a potential entry based off of the price bouncing. And that's what we'll do here. We'll go ahead and, for an example, one can buy stock, and we can practice by putting on a practice stock trade. However, what I'll do in this example is actually something that's going to be discussed in our next session with James Boyd. It's going to be cash covered calls and cash secured puts. I'm going to do an example of a cash secured, or if it's a margin account, maybe referred to as a naked put, where one can sell some premium and possibly own the stock if the price pulls back. So what I'm going to do is I'm going to go to Trade tab, look at Facebook, and we'll look out. Let's look at an example 50 days out on Facebook, and go ahead and look at some of the options here. And a lot of these are discussed in our options classes. If you want to learn more about selling options as well, the Wednesday class for trading verticals at 3 p.m. Eastern time, we cover spreads in that trade, which are just building up on some of these puts and calls that we're selling. So I'm just going to look 50 days out, and for example, look somewhere at around a delta, around the 30 delta range. You know, one can go a little further out if they want. So we have 160, and you got 155s at a 22 delta. So here's some of the premiums that are being sold. One can sell, in this example, $3.45 to $3.50 in premium. That premium would end up being about $345, and it would require the obligation of us potentially owning stock at 160 if the price pulls back. Now, if I go ahead and click sell on this, on the bid price, we'll do 1. Now, remember, 100 shares of Facebook at $165 is going to result in an obligation of owning the stock at $160, which would basically be about $16,000. Now, that's certainly based off the size of our account, falls within that realm there, so no worries there for our practice account. And our maximum profit is going to be the credit of $345. So if the price stays where it's at or goes higher, our practice account would keep that $345. If the price goes at or below 160 and is below 160 at expiration, although it could be assigned previously, we would potentially own the stock at 160. But we received a credit of $3.45, so the break even on this is at $156.55. Now, if we go ahead and send this through, we'll do that. So we got a fill right there. If we go back to the chart and look to see where 156 is, notice that's actually fairly close to potentially trending support based off the 55-day moving average. It looks like we do have a bit of a trend line here. That's a little bit higher. But the price would have to drop significantly for this position to lose money. Now, and it certainly can do that. But what we can do is if price does break below support, one can certainly go ahead and buy that put back at a loss. But it would potentially be a little more of a defined loss there. Although losses can be significant. Again, the risk is ownership of the stock. And for our example, the risk is owning the stock at 160. And anything below that break-even point would be a potential loss. So if you learned a little something new with that, I know that was pretty quick, but you can take a deeper dive on that. And Carrie, we don't necessarily take recommendations for like individual stocks, because keep in mind we're not providing investment advice or trader advice and things like that. But Micron is one of the stocks that I believe we may actually have a practice position on here. Oh, got a little error here. We actually have an example of a put vertical. I believe it's a put vertical on Micron. We'll be reviewing this more on Wednesday. Targeting around the 37 price point. Stock is uptrending. But as far as today's price action's doing something very similar to the market. It opened higher, and it is potentially trading lower. Nothing significantly has changed with the trend. This is an example of a channel in stock. And when we had done our example, we were basing the example on price possibly continuing to drift higher, but no guarantees on that. Price may pull back and actually retest where it broke out around the 40 price mark. But this is another example of a stock that has more recently reversed in the technology side. A lot of technology stocks had formed examples of that inverse head and shoulders, transitioning from making lower lows to making higher lows. We had crossovers on the moving averages, and then price broke above that neckline. Example of a neckline around that $40 mark. May come back and retest. We'll see, and we'll continue managing our practice trades accordingly. Wow, folks, things went very quickly here. Let's take one quick look before we'll wrap things up on some of our existing practice positions. I don't think we have any major changes there. We do have examples of calls that we have sold on some of the trending stocks like Hershey and GE that are going in the money, so we may be called away on these stocks. However, these were also examples of stocks that had hit potential targets after they reversed back in December. And if one is willing to give up the stock, then selling calls against them may be an option for you. And again, that's another plug for our next session that's coming up with James Boyd on selling puts and covered calls as well. All right. So what did we learn today, folks? We learned, took a deeper dive on those candlestick patterns. We gave you some identification on some of the bullish and bearish reversal patterns. And we also discussed some of those techniques, utilizing some of those candle patterns, how to look for them, and looking at some of those holds when prices close above the high, the low day. Now, each and every week, we'll take another deeper dive on one of these principles and then continue practicing them, utilizing some of the more widely traded stocks, whether it's on the NASDAQ, the penny increment stocks that are available, and continue practicing and managing those trades. And then hopefully, as far as for yourself, you have the abilities to go ahead and practice some of these same trades. What I encourage you to do is utilizing some of the same tools. Go ahead and do a practice trade or two on a stock that may behave in some of these similar patterns. Maybe it's after, if the market pulls back a little bit, one may look for a bounce, looking for prices to trade above the high of the low day. Now, before we let you go, we would like you to go ahead and fill out a survey that's coming across in the chat. We would certainly love to get your feedback here, as it's important for us to know how we're doing and that you're getting a learning experience here. And that learning is going to continue here. If we go back to our slides here, coming up, we're going to have Ben Watson doing covered calls and cash secured puts. And then also remember that anything we discussed here today, we demonstrate the functionality of the platform utilizing actual symbols. Keep in mind, TD Ameritrade does not make recommendations or determine the suitability of any security or strategy through the use of our tools. Any investment decision you make in your self-directed account is solely your responsibility. So go ahead and click on that survey, folks. Tell us how you feel. Looking forward to seeing you again tomorrow at the market open with Swing Trading. And have a great day. Bye now.